Simon says subscribe and click on the bell icon to receive notifications.
Connecting your bank accounts to QBO enables you to automatically import transactions, reconcile accounts, and streamline financial management. By syncing your bank accounts, you can eliminate manual data entry, ensure your books are always up to date, and gain real-time insights into your business's cash flow. QuickBooks securely connects your bank accounts, providing accurate and timely information for better financial decisions. In this module, we'll walk through how to connect your bank accounts to QBO and manage the imported transactions. Connecting your bank account to QuickBooks is straightforward and allows you to automatically import and categorize transactions from your bank or credit card accounts. Start by logging into your QuickBooks account, and from the left-hand menu, select Transactions. This will take you to the Banking page, where you can connect your accounts. In the Banking tab, click on the Link Account button in the upper right corner. QuickBooks will display a list of popular banks, but you can use the search bar to find your specific bank. Type in your bank's name and select it from the list. You'll be prompted to enter your online banking credentials to securely connect your account. QuickBooks uses bank-level security to protect your data. After logging in, QuickBooks will display the available accounts such as checking, savings, or credit cards. Select the account you want to connect. Choose the date range for importing transactions, such as the past 30, 60, or 90 days. You can also customize the date range based on your needs. After selecting the accounts and date range, click Connect to link the bank account to QuickBooks. The software will start importing your transactions. For example, Flourish Bakeries connects its business checking and credit card accounts to QBO. By doing this, they automatically import all transactions such as purchases for catering supplies and ingredients, which helps them save time and reduce manual data entry. Once your bank account is connected, QuickBooks will automatically import transactions. You'll need to review and categorize them to ensure accurate financial records. To review and categorize bank transactions, go to the Banking section, and from the left-hand menu, select Transactions, select the connected bank account. You'll see a list of recently imported transactions that need to be reviewed. QuickBooks may automatically categorize some transactions based on previous activity or bank descriptions, but it's important to review each transaction to confirm it's categorized correctly. For example, if you paid a vendor, QuickBooks might suggest categorizing the transaction as an expense for that vendor. For each transaction, choose the appropriate category, be it office supplies, utilities, rent, and so forth. Assign it to the relevant customer, vendor, or project if applicable. If QuickBooks finds a matching record, such as an existing invoice, it will suggest a match. If the match is correct, click Match. Otherwise, click Add to create a new record. Repeat this process for all transactions. After importing transactions, Flourish Bakeries reviews the list and sees that QuickBooks has categorized a payment for flour as a packages and supplies expense. Since this correctly matches their regular inventory purchases, they confirm the categorization to ensure accurate tracking of their business expenses. Connecting your bank accounts to QuickBooks provides real-time cash flow insights, enabling better financial management decisions. With bank feeds connected, you can track real-time cash inflows and outflows. Use this information to plan for upcoming expenses and manage payments. You can also set up alerts in QuickBooks for low balances, upcoming bills, or overdue invoices to stay on top of your cash flow. You can also use QuickBooks cash flow reports to analyze your financial health over time. This helps in making data-driven decisions for your business. Connecting your bank accounts to QBO automates transaction imports, saving you time, reducing errors, and ensuring your financial records are accurate. By syncing your bank accounts, you can easily categorize transactions, reconcile your accounts, and gain valuable insights into your cash flow. With QuickBooks, you'll have real time access to your business's financial health, making it easier to manage cash flow, pay bills on time, and make informed decisions for your business's future. Managing bank transactions in QBO is crucial for keeping your financial records accurate and up to date. By importing, reviewing, and categorizing your bank transactions, you ensure that your books reflect the real time financial activity of your business. QuickBooks makes it easy to manage bank transactions automatically, reducing manual data entry, saving time, and streamlining your accounting process. In this module, we'll walk through how to manage your bank transactions in QBO, including reviewing, categorizing, and reconciling transactions. When you connect your bank accounts to QBO, your transactions are automatically imported, saving time and ensuring your financial data stays up to date. To import bank transactions, start by logging into your QuickBooks account. From the left-hand Transactions Banking menu, select the bank account that's connected to QuickBooks. QuickBooks automatically imports your most recent transactions from the bank account. Transactions that have been imported but not yet reviewed will appear under the For Review tab. If you need to manually import transactions, such as for a custom date range, you can do so by downloading a CSV or OFX file from your bank's online portal and then uploading it to QuickBooks. To upload, simply click Link Account, Upload from File, and follow the prompts to import the transactions. After your transactions are imported in QBO, it's important to review and categorize them to ensure they're accurately reflected in your financial records. Now let's discuss how to review and categorize bank transactions. Firstly, we go to the For Review tab. In the Banking section, you can access the For Review tab. This is where you'll see all the newly imported transactions that haven't yet been categorized. Click on each transaction to review the details. QuickBooks may automatically suggest a category based on previous transactions or bank descriptions. Review this suggested category to ensure it's correct. For each transaction, select the appropriate expense or income category, such as office supplies, utilities, rent, sales income, and so forth. If the transaction relates to a specific vendor, customer, or project, assign it accordingly. If you frequently have similar transactions, you can set up bank rules to automatically categorize them in the future. Let's say after importing transactions, Flourish Bakeries noticed a purchase from a local supplier for catering ingredients. QuickBooks automatically suggests categorizing this as supplies expense, which matches the bakery's typical purchases. The accounting team at Flourish Bakeries reviews and confirms this categorization, ensuring their financial records are accurate and reflective of the bakery's operating costs. If the transaction matches an existing record in QuickBooks, such as an invoice or bill payment, QuickBooks is going to suggest a match. Review the match, and if it's correct, click Match. If no match exists, click Add to create a new entry for the transaction. While reviewing transactions, the accountants at Flourish Bakeries identified a bank deposit that matched a recently issued invoice for a corporate catering event. QuickBooks suggested a match between the bank deposit and the corresponding invoice. After reviewing the details, the accounting team at the bakery confirmed the match, ensuring the transaction is accurately recorded without duplication. Repeat this process for each transaction. If the transaction needs to be split across multiple categories or projects, click Split to allocate the appropriate amounts to each category. For example, if a payment covers both office supplies and marketing expenses, you can allocate the correct amounts to each category. QBO provides several reports to help you track and monitor your bank transactions, ensuring that your accounts are properly managed and reconciled. There are several key reports for managing bank transactions, starting off with the Banking Summary Report. This report provides an overview of your bank account activity, including all transactions, balances, and any unreconciled items. To generate, go to the Transactions, and here on the right you can see Go to Bank Register link. Click on it to access the journal for the selected account. Here you can see a list of all payments and deposits and the running balance after each transaction. It will also show the payee and the category assigned to it. It can be reviewed, and if required, you can delete or edit the transaction from here as well. You can monitor the overall status of your bank accounts and identify any unreconciled transactions using this report. The reconciliation report shows the results of your most recent bank reconciliations, including which transactions were reconciled and any discrepancies. To generate, you can access this report from the Reports tab by searching for Reconciliation Reports. Using this report, you can review the accuracy of your reconciliations and also maintain a history of reconciled transactions. The Transaction Detail by Account report provides a detailed breakdown of all transactions within your bank account. You can run this report from the Reports tab and searching for Transaction Detail by Account. You can use this report to review specific bank transactions, track payments and deposits, and analyze your account activity. Managing bank transactions in QBO ensures that your financial records are accurate and always aligned with your bank accounts. This is extremely important. By regularly importing, reviewing, and reconciling transactions, you can streamline your financial management, reduce manual data entry, and gain real time insights into your business's cash flow. With QuickBooks, managing bank transactions becomes a seamless process, allowing you to stay organized, avoid errors, and focus on growing your business. Reconciling bank accounts in QuickBooks is a crucial step in ensuring that your financial records match your bank statements. The reconciliation process helps you identify discrepancies, verify that all information is recorded accurately, and maintains the integrity of your books. In this guide, we'll walk through how to reconcile your bank accounts in QuickBooks Online Canada, helping you keep your financial records accurate and up to date. Reconciling your bank accounts in QuickBooks Online offers several key benefits. Accuracy ensures that your QuickBooks records match your bank statements, improving the accuracy of your financial reports. Detects errors, helps you catch bank errors, duplicate entries, or missing transactions so you can correct them promptly. Improved financial management provides you with a clear and accurate view of your business's financial position. Fraud detection. Regular reconciliations help identify any unauthorized or fraudulent transactions. Before you begin reconciling your bank accounts in QuickBooks Online, make sure you have everything you need, including your latest bank statement. Your bank statement should show the beginning balance, ending balance, and the transactions for the period you're reconciling. Before reconciliation, ensure that you have your bank statement ready. Your bank statement should include the beginning and ending balance, the statement period, and all transactions for that period. Also ensure all transactions are entered in QuickBooks. Make sure that all transactions, including payments, deposits, and fees have been recorded in QuickBooks. You also need to ensure that any bank fees or interest is recorded in QuickBooks if they weren't automatically imported. Once you have your bank statement and QuickBooks records ready, you can begin the reconciliation process. Start by logging into your QuickBooks account, and from the left-hand menu, select Reconcile. This will take you to the reconciliation page. From the drop-down menu, choose the bank or credit card account you want to reconcile. Enter the statement ending balance and statement ending date from your bank statement. If your bank charges fees or pays interest that hasn't yet been recorded, enter those amounts as well. Once you have entered the necessary information, click Start Reconciling to begin the process. Once you have started reconciling, QuickBooks will display a list of transactions from your bank account and the transactions you have recorded in QuickBooks. The goal here is to match the transactions in QuickBooks with those on your bank statement. To match transactions, start off by reviewing the transactions. In the reconciliation page, QuickBooks will display your bank transactions on one side and your QuickBooks transactions on the other. Review these transactions to ensure they match. Check the box next to each transaction that matches your bank statement. QuickBooks will update the running balance at the top of the screen as you check off transactions. If you find a discrepancy between a transaction in QuickBooks and the one on your bank statement, investigate the difference. Discrepancies could be due to duplicate entries, missing transactions, or bank errors. During reconciliation, you may encounter discrepancies between your QuickBooks records and your bank statement. It's important to investigate and resolve these discrepancies before finalizing the reconciliation process. Let's discuss some common causes of discrepancies. Missing transactions. A transaction may not have been recorded in QuickBooks or your bank account. To fix this, add the missing transaction in QuickBooks or check if the bank transaction has been entered incorrectly. Duplicate transactions. These transactions can occur if a payment or deposit was recorded twice. To resolve this, delete or void the duplicate entry in QuickBooks. Incorrect amounts. A transaction amount in QuickBooks may differ from the amount on your bank statement. Edit the transaction in QuickBooks to match the correct amount on your bank statement. To resolve discrepancies, it's important to identify the cause. Review the transactions in question to determine why there is a discrepancy in the first place. If a transaction is missing, click Add to create it. If a transaction amount is incorrect, click Edit to adjust the amount. If the transaction is a duplicate, click Delete or Void to remove it. Once you have resolved the discrepancies, review your reconciliation to ensure that everything balances out. For example, let's say while reconciling the bank account for Flourish Bakeries, the accounting team discovers a duplicate entry for a payment made to a supplier. QuickBooks flags this issue when the amounts didn't match the bank statement. To resolve this, the accounting team voids the duplicate transaction in QuickBooks, ensuring that the reconciliation process can proceed smoothly with accurate data. Once you have matched all transactions and resolved any discrepancies, it's time to complete the reconciliation. We start off by reviewing the reconciliation summary. QuickBooks will show a summary of your reconciliation, including the starting balance, cleared transactions, and the ending balance. If everything matches, the difference will be $0.00. If the accounts are balanced and there's no difference, click Finish Now to complete the reconciliation. QuickBooks will save the reconciliation and update your financial records. After completing the reconciliation, you can print or save the reconciliation report for your records. This report shows all the transactions that were reconciled and any adjustments made during the process. QuickBooks Online Canada provides reconciliation reports that allow you to review the results of your reconciliations. These reports are useful for tracking your progress and ensuring that your accounts remain balanced. To review the reports, go to the Reports section and search for Reconciliation Reports. Choose the bank or credit card account you want to review and select the reconciliation period. The reconciliation report provides a summary of the reconciliation, including the starting balance, cleared transactions, and ending balance. You can also see any discrepancies that were resolved during the reconciliation. If needed, you can save or print the report for future reference. Reconciling your bank accounts in QuickBooks Online ensures that your financial records are accurate and up to date, helping you manage your business's cash flow and spot any discrepancies or errors. By regularly reconciling your accounts, you can maintain the integrity of your books, improve financial management, and ensure that all transactions are recorded properly. With QuickBooks' easy to use reconciliation features, you can streamline the process, reduce errors, and focus on growing your business with confidence.
Hi, from everyone at Simon Says It. We hope you're enjoying this training lesson. Please like this video to show your support for the channel. If you want to take your learning further, earn a certificate for this course, and gain access to over 200 courses ad-free, click up there and go to simonsaysit.com. Thanks for watching, and back to the course.
Handling bank errors and discrepancies in QBO is crucial for ensuring your financial records are accurate. Errors or discrepancies may arise due to duplicate transactions, missing entries, or incorrect amounts. In this guide, we'll walk you through the steps to identify and resolve bank errors and discrepancies in QBO, helping you maintain accurate financial records. Addressing bank errors and discrepancies in QBO provides several important benefits. Accurate financial records ensures your QuickBooks records match your bank statement, leading to precise reporting and better decision making. There's also the benefit of streamlined reconciliation. This helps avoid discrepancies, making the reconciliation process more efficient. Improved cash flow management. There is the added benefit of keeping your cash flow accurate by ensuring all payments and deposits are properly recorded. And finally, there is the benefit of fraud prevention. Identifying unauthorized or erroneous transactions protects your business's financial health. Before resolving discrepancies, you need to identify the source of the issue by reviewing your bank transactions and comparing them with QuickBooks. At Flourish Bakeries, the accounting team noticed that a large deposit for a catering job wasn't showing up in QuickBooks, even though the bank statement reflected the amount. After reviewing the transactions in QuickBooks, they realized the deposit had not been recorded. By identifying this missing transaction, they were able to manually enter it into QuickBooks and proceed with reconciling the account. To identify bank errors and discrepancies, go to the Reconcile page from the left-hand Transactions menu and selecting Reconcile. Choose the bank account you want to reconcile. Review the transactions in QuickBooks and compare them to your bank statement. Look for discrepancies such as amounts, missing transactions, or duplicates. You need to check for common discrepancies such as missing transactions. Ensure all payments, deposits, and transfers are recorded in QuickBooks. Also check for duplicate entries. Look for transactions that may have been recorded twice. Last but not the least, check for incorrect amounts. Verify that amounts for each transaction match those on your bank statement. Use filters to narrow down issues. In the For Review tab under Banking, filter transactions by date, transaction type, or category to help locate discrepancies. Once you have identified discrepancies, the next step is to resolve them. This may involve adding missing transactions, correcting amounts, or removing duplicates. While reconciling their account, Flourish Bakeries discovered that a payment for ingredients has been entered twice. To resolve this issue, they deleted the duplicate transaction, ensuring their financial records reflected the correct amount paid. Let's discuss some ways in which we can resolve bank errors and discrepancies. Correct missing transactions. If a transaction is missing in QuickBooks, click the New button and choose the appropriate transaction type, such as expense, deposit, or payment. Enter the correct details to ensure the transaction is recorded accurately. If you find duplicate entries, click on the duplicate transaction in QuickBooks and select Delete or Void to remove it. If a transaction amount in QuickBooks doesn't match your bank statement, click on the transaction and select Edit. Enter the correct amount and save the changes. Add any missing fees or interest income to QuickBooks by clicking New and selecting Expense or Deposit as needed. After making adjustments, return to the Reconcile page and confirm that your bank statement and QuickBooks records match. The difference should now be $0.00. Once discrepancies are resolved, complete the reconciliation process to ensure your financial records match your bank statement. Let's discuss another example. The accounting team at Flourish Bakeries noticed that a bank fee had been recorded with the wrong amount. After editing the transaction to reflect the correct fee, they were able to reconcile their bank account, ensuring that the books matched the bank statement exactly. Let's discuss how to reconcile after resolving discrepancies. Go back to the Reconcile page under the Accounting menu. Enter the statement ending balance and date. Review and match transactions with your bank statement by checking the boxes next to each matching entry. The difference between your bank balance and your bank statement should be $0.00. If not, review the transactions again. Once your accounts are balanced, click Finish Now to complete the reconciliation process. QuickBooks provides several reports that can help you track discrepancies and ensure your accounts are balanced. The reconciliation report shows transactions that were changed after reconciliation, helping you track down discrepancies. To generate this report, go to the Reports tab and search for reconciliation. The Banking Summary report provides an overview of reconciled and unreconciled transactions, helping you track errors. The Transaction Detail by Account report offers a detailed list of transactions for each account, helping you identify discrepancies in individual transactions. Run this report from the Reports tab by searching for Transaction Detail by Account. Handling bank errors and discrepancies in QBO is essential for maintaining accurate, up-to-date financial records. By promptly identifying and resolving discrepancies, you ensure that your financial reports are accurate and that your cash flow remains under control. Tracking credit card transactions in QBO is essential for managing business expenses, monitoring balances, and maintaining accurate financial records. By importing and categorizing credit card transactions, you streamline the process of tracking your business's spending, avoid missed payments, and ensure your financial records are always up to date. In this guide, we'll walk you through how to track and manage credit card transactions in QBO, ensuring you get the most out of this powerful tool. Tracking credit card transactions in QBO offers several benefits. Accurate expense tracking. Automatically import and categorize credit card transactions, reducing the need for manual data entry. Monitor credit card balances. Stay on top of credit card balances in real time to prevent overspending and avoid missing payments. Improved cash flow management. By closely monitoring your credit card spending, you can manage your business's cash flow more effectively and plan for future payments. By using QuickBooks to track credit card transactions, you can efficiently manage and categorize your expenses, simplifying the expense management process. The first step to tracking your credit card transactions in QuickBooks is connecting your credit card account. This enables QuickBooks to automatically import transactions, saving you time and reducing errors from manual entry. To connect a credit card account, after logging into QBO, and from the left-hand menu, select Transactions, and by selecting Link Account. Use the search bar to find your specific credit card provider from the list of popular banks and credit card providers. Enter your online banking credentials for the credit card payment. QuickBooks uses bank-level encryption to keep your data secure. QuickBooks will display your available credit card accounts. You now need to select the account you want to connect. Choose the date range for importing transactions, which can go back as far as 90 days. You can also customize the date range to suit your needs. Once you have selected the account and date range, click Connect to start importing transactions automatically. Flourish Bakeries uses a business credit card to purchase supplies for daily operations. By connecting the credit cards to QuickBooks, they are able to automatically import all supply purchases, saving time and ensuring accurate transaction recording without manual entry. Once your credit card transactions have been imported in QBO, the next step is to review and categorize each transaction. This ensures that your expenses are accurately tracked and organized. To review and categorize credit card transactions, in the Transaction section, select the connected credit card account. Newly imported transactions will appear under the For Review tab. QuickBooks automatically suggests categories based on previous transactions or the merchant's description. Review these suggestions to ensure they are accurate. For each transaction, assign the correct category, such as office supplies, meals, travel, and so forth. You can also assign transactions to a specific group, to a specific project, vendor, or customer for more accurate tracking. If you have recurring expenses, such as monthly subscription fees, set up bank rules to automatically categorize similar transactions in the future. This reduces manual work and improves efficiency. If a payment or refund matches an existing record in QuickBooks, QuickBooks will suggest a match. Confirm the match by clicking Match. The approved transactions will be reflected in your financial records. At Flourish Bakeries, recurring expenses like flour, packaging, and ingredients are purchased on a company credit card. By setting up bank rules in QuickBooks, the bakery can automatically categorize these recurring expenses into the correct categories, ensuring that the business's financial records are always up to date without manual input. It's essential to accurately record credit card payments in QuickBooks to ensure that your credit card balances and financial records are accurate. QuickBooks makes it easy to record payments and track them within your system. To record credit card payments, click on the New button, then select Pay Down Credit Card under the Other column. Select the credit card account you're paying off from the drop-down list. Choose the account from which the payment will be made, such as checking or savings account. Enter the payment amount, the payment date, and any relevant memo details such as partial payments or full payment descriptions. After reviewing the payment details, click Save and Close to record the payment. The payment will be reflected in your credit card, account balance, and your financial records. QuickBooks provides a variety of reports that help you track your credit card transactions and monitor your spending. These reports allow you to keep a close eye on your credit card balances, expenses, and payments. The transaction detail by account report breaks down all transactions in your credit card, including charges, payments, and refunds. You can run this report from the Reports tab by searching for transaction detail by account. The Expense by Vendor Summary report shows how much you've spent with each vendor using your credit card, making it easy to track which suppliers receive the most business. Access this report by searching for Expense by Vendor Summary under the Reports tab. Tracking credit card transactions in QBO simplifies the process of managing expenses, monitoring credit card balances, and keeping financial records accurate. By connecting your credit card, categorizing expenses, and recording payments, you ensure your business's financial data is always up to date and organized. Reconciling your credit card payments in QBO ensures that the transactions in QuickBooks match the charges and payments on your credit card statement. Regular reconciliation helps you identify discrepancies, track spending, and ensure that your credit card balances are accurate. In this guide, we'll walk you through the steps to reconcile your credit card accounts in QBO, ensuring your financial records are accurate. Reconciling your credit card accounts in QBO offers several key benefits. Accurate financial records, for one. You always ensure that your QuickBooks records match your credit card statement, improving the accuracy of your financial data. Discrepancy detection. Identifying and resolving discrepancies such as duplicate entries or missing transactions prevents bookkeeping errors. Cash flow management. Reconciling credit card accounts helps you monitor card balances and spending, enabling better cash flow management. Simplified tax preparation. Maintaining accurate records of your credit card expenses makes tax preparation easier. Before reconciling, ensure you have the latest credit card statement, which includes the statement ending balance, the statement ending date, and all transactions for the statement period, including payments, charges, fees, and interest. Here's a quick checklist before reconciliation. Gather your credit card statement. Make sure you have the statement corresponding to the period you're reconciling. Review imported transactions. Ensure all transactions, charges, payments, and fees included are recorded in QuickBooks. Enter any missing transactions manually. Check for adjustments. Confirm that interest charges and fees are recorded in QuickBooks. At Flourish Bakeries, the accounting team reviews the monthly credit card statement to ensure all baking supplies, ingredients, purchases, and other expenses are accurately recorded in QuickBooks. Before reconciling, they verify that all transactions are correctly imported and any fees charged by the credit card company are accounted for. Once you have gathered the necessary information, you can begin reconciling your credit card account. Log into QBO and navigate to the Reconcile page. From the left-hand transaction menu, select Reconcile. Select the credit card account. In the Account drop-down, select the credit card account you want to reconcile. Enter the ending balance and ending date from your credit card statement. If there are interest charges or fees not recorded in QuickBooks, enter those as well. Once you have entered the statement details, click Start Reconciling. After starting the reconciliation, QuickBooks will display the imported credit card transactions. The goal is to match these with your credit card statement. Compare QuickBooks transactions with those on your credit card statement. Verify that amounts, dates, and descriptions match. Check the box next to each transaction that matches your credit card statement, marking it as reconciled. Investigate any discrepancies. These could be due to duplicate entries, missing transactions, or incorrect amounts. If a transaction is missing, click Add to enter it manually. If a transaction needs adjustment, click Edit to update the details. During the reconciliation process, the accounting team at Flourish Bakeries identified a duplicate transaction for a flour order. They deleted the duplicate entry in QuickBooks and ensured the correct amount matched the credit card statement before proceeding with the reconciliation. You may encounter discrepancies between your QuickBooks records and your credit card statement. These should be resolved before completing the reconciliation. Let's quickly discuss some common causes of discrepancies. Missing transactions. If a transaction is missing from QuickBooks or your statement, enter it manually in QuickBooks. Duplicate transactions. Remove any duplicate entries by deleting or voiding the extra transaction. Incorrect amounts. Edit the transaction in QuickBooks if the amount differs from your credit card statement. To resolve discrepancies, firstly, identify the cause. Review the transactions with discrepancies to determine the root cause. Add, edit, or delete transactions. Add missing transactions, edit incorrect amounts, or delete duplicates. Review the reconciliation. After resolving discrepancies, review the reconciliation to ensure everything is balanced. Once all transactions are matched and discrepancies resolved, complete the reconciliation process. To complete the process, review the reconciliation summary. QuickBooks will show the starting balance, cleared transactions, and ending balance. The difference should be $0.00 if everything is correct. If there is no difference, click Finish Now to complete the reconciliation. Print or save the reconciliation report, which shows the reconciled transactions and any adjustments made. Reconciling your credit card accounts in QBO ensures accurate financial records and proper tracking of your spending. Regular reconciliation helps you identify discrepancies, avoid errors, and maintain control over your credit card balances. With QuickBooks' powerful reconciliation tools and reports, managing your transactions becomes a seamless process, allowing you to focus on running your business efficiently.
If you're not a subscriber, click down below to subscribe so you get notified about similar videos we upload. To see the full course that this video came from, click over there. And click over there to see more videos from Simon Says It.